Hello everyone, it is the Canadian Futures Trader here. It is currently January 1st, 2021. You know how when you go into a new year, you always kind of trip up and you always say the previous year for like the first week or something? I feel like with 2021, people are anxious to be done with 2020, so it kind of rolls off the tongue to say 2021. Anyway, welcome to the video. I thought I would do a video about the OneUp Trader getting funded process. Now, I'm a little bit ahead of myself. If you've followed any of my videos on Thursday, today is actually only Friday, but Thursday trading day, I passed the OneUp Trader evaluation in terms of the dollar goal. I still have 4 days to trade, but I don't anticipate any problems. I'll obviously just be making a small trade each day just to kind of count those 4 days. So I've been spending a lot of time looking into the funded process and wanting to get familiar with it. Some things seem pretty standard, but there's a few things that I was like, well, what does this mean? And I actually went and did the research, so I thought I would share that. So basically, this is all from their own facts page. You can see the URLs up here if you need to. Getting funded process, pretty generic. Pass the evaluation, complete the trader questionnaire, complete the contract, get funded with our prop partners. And it says here, should take a few days. Now, part of the research, if you want to call it, was I went around and asked on different trading forums, like, hey, anyone funded with OneUp Trader? I have some questions. So I was able to ask actual funded traders questions like, okay, how long did it actually take? You know, what, and we're going to get to it in the video. What are some additional rules that you have when you're funded? So they all said, there's only a few of them that I talked with, but yeah, it literally just takes a few days. Once you pass day 15, it all updates in your dashboard. They will email you. It sounds like in the past you had to email them and say, hey, I passed, go look at my account. It sounds like they've come a little bit more modern now, where it's by default will say, congrats, you passed, like here's what you need to do next. And it takes a few days. So that the questionnaire, I've seen the questionnaires as well. It's just very just like, what's your name and address and all that, and like what's your goals with trading, what's your risk, how do you mitigate risk, what products do you trade, what times do you trade. It's just so they kind of have an idea of what you will be trading like and be able to see if you stick to that. And then the contract has to do with obviously the profit split and some of the rules. So let's get to some of those things. Funded trader rules, you can watch the video. We're not going to watch it together. Trade only allowed instrument during permitted times. This is the same as any of the company combines and evaluations. I mean, I'm not going to go through all the stuff, but basically it's most futures, contracts. It doesn't really change from the evaluation stage. So I'll just leave it at that. And same thing with the permitted times. The one difference I will say, and that's actually one of the rules here, with OneUp, you can not trade during major economic releases. Some of the different companies you can, most of them you can't. So it's just something to keep in mind, to keep an eye on the calendar. But anyways, I don't want to jump ahead. Do not let your account balance go or touch beyond the trailing drawdown. I'm going to show you that screen, the example they have. Follow the dynamic scaling targets. We're going to talk about that in a second. We talked about economic releases. There's a calendar. You can click on it and look at it at the beginning of the week. That's basically my routine. Is on Sundays, I'll take a look at the calendar. What's going on this week? When do I need to not be trading? And it's usually not a big deal. And then the thing that I was most interested in, this is what really got me started looking for more information, was additional probationary initial 90-day guidelines may be imposed, blah, 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 blah. So it's like, okay, that's pretty open. Like they basically are saying, oh, by the way, we can also make any other rules we need to, and you have to follow them. So this is one we're going to go into in a second after we cover these few. But I was able, so one of the funded traders was nice enough, he actually sent me a screenshot of what those rules are in the contract. So first, though, let's get to it. So this is the trailing drawdown. Guys, it works just like the evaluation part of the account. You start with a drawdown. This is the 100K account, which I actually is the one that I completed. So these examples are pretty relevant. You initially, have the several $1,000 trailing drawdown. It goes up as you make up profit. If you have a losing day, it doesn't go down. It just stays the same. And then once it gets to 100K, it just flattens. So everything over that, you are good. So that's pretty standard, I would say. There's no surprises there. So let's move on to the next point. So scaling targets. So you're probably familiar with this because most of the other, I would say, like evaluation companies like TopStep and Earn the Trade specifically, even in the combine, like the evaluation stage, you have these scaling targets. You don't just get like your full clip of contracts. So for example, mine was 12 contracts in the 100K evaluation. With TopStep or Earn to Trade, you don't get to trade all of those right away. So you're probably used to a scaling thing. With OneUp, I was actually kind of surprised. When I started the evaluation, I just assumed it was scaling. You actually get the full, I had the full 12 contracts available to me the entire evaluation. Once you get funded, though, now you do have to scale. So I'm going to go down here to the 100K account because that's what I'm in. And it's, again, it's standard relative to what the other companies are. So for your first up to 2,000 in profit, I can only trade 3 lots. So, oops, I tried to drag it there. So definitely something to keep in mind. Now, the one nice thing with OneUp, and I'm assuming this carries forward into the funded account, they just won't let you trade more than this. So like with TopStep, for example, you can accidentally trade too many contracts and they will then fail you for it. With OneUp, the evaluation phase, it wouldn't even let you enter too many contracts. And I'm assuming that's the same with the funded. So it's not so much a rule that you have to worry about breaking it and failing and getting kicked out. It's more like a rule like you're going to have to trade within, just know that you're only getting 3 lots up to 2,000. It scales up from there. Honestly, these are more than fair. It's fine. And then, so once you're over 5,000 in profit, I'll have the full 12 lots available to me. And these do change from what I read. I believe it's updated at the end of the day. I can't remember if it's intraday. I'm not too worried, guys. Honestly, it was very seldom that I trade the full 12 lots. It's nice having them available, but I'm not necessarily going to be trading like 12 lots every single trade. Things move very quickly when you trade 12 lots. Yeah, so especially in the bonds where every tick is $31 per contract. So you trade 10 of them, for example, that's every tick is $300. It shoots a few ticks against you, all of a sudden you're eating, over $1,000 loss. So I try to trade more in the 3 to 4 lot range anyway. Let's continue. Commissions, this is just an FYI, it wasn't really a rule. Commissions that they're going to charge are more than fair. One thing I'll mention just before I look at the commissions here is one nice thing that OneUp does is they don't charge you a monthly data fee, whereas most of the other companies do. Like TopStep, I think it's, I want to say it's $100 or it's $130, somewhere around there per month for data, which is, or I should say data and like exchange fees, whatever it is. I'm probably misspeaking on exactly what the fee covers. But basically you have to pay a monthly fee, which isn't, I mean, don't get me wrong, paying $100 for a month to have full access to your account, I wouldn't be worried about it. But on the flip side, it's kind of nice that OneUp just covers that for you. As far as commissions, so commissions per side, I trade the Ultra Bond, $1.71. RT, if you're not familiar, means round trip. That means you buy it and then you sell it and your transaction is complete. That's a round trip. Or likewise, you sell it, then rebuy it. Basically, the full transaction of getting in and out. It's $3.42, very reasonable. Like I said, in the past, I have actual just my own like open live accounts. And these commissions are right in line with what's normal. So let's take a look at that, the one thing here, the additional 90-day guideline. I'll show you what I was sent. Okay, guys, so this is actually a screenshot from the contract that one of the traders sent me. So the first things are actually the same stuff that's right on the website. Only trades are permitted times, the trailing drawdown, the scaling targets. You have to be closed, so this is a little more specific, at least 1 minute prior to major economic releases and 1 minute after, up until 1 minute after major economic releases. So basically just don't even trade around that time. And from what I've been told before I go on, in the funded stage, OneUp is a little more lenient. They don't say, like, if you break this rule, like, you're done and you're out. They're a little more flexible. They say, if you break it, we're going to send you a warning. If you do it again, then you're probably losing your funded account. But it's not an automatic, like, you lose your account, which is one of the pros. I have to say, they're a little more reasonable, if you will, with the rules. So these are the 2 rules that make up this particular trader's additional 90-day probationary kind of stuff, if you will. So it'll be curious to see if I get the same rules or if I get additional rules, not these rules, whatever it might be. Trader must maintain a minimum weekly trade volume execution no less than 50% of the average trading volume of executions during the past evaluation. So I asked the trader, I was like, do they actually give you a hard number? So basically they're saying like, hey, if you traded, in and out. Let's say you trade like a crazy person during the evaluation and then you get your funded account and you just sit on it and basically do nothing. All of a sudden you're doing like minimal amount of trading. That's not what they want to see. They want to see you trade the same way you traded when you passed the evaluation. That's what they're expecting. So you basically just have to do at least half of that. So I asked the trader how this works. I was like, do they give you like a hard number? Do they say, hey, during the evaluation you traded, I don't know, 200 contracts during like a 5-day period, so you have to trade at least 100 a week with us? He said no. they just trade like a normal person. Just trade how you trade it, and at worst, they'll send you a warning and say, "Hey, you're not really trading like you used to." So again, you just kind of get a warning if you're not really following this. This one as well. So this is one that I don't think will be an issue, but it's good to know it. Trader must have a positive net P&L, so that means after commissions, greater than zero at the end of the initial 15 calendar days from the account start date, and in subsequent 15 calendar day intervals. So if I got my account, it honestly work out perfect if I got my account on the 15th, just to make the timekeeping a little easier. But so if I got it on the 15th, that means by the 30th I have to have a positive account. That means on the 15th of the following month I have to have a positive account, 30th, etc. This rule only applies during the initial 90-day probationary period starting the first day of trading. So for the first 3 months from the moment you're funded, every 15 days your account has to be positive. So again, I don't see this being an issue. Basically, again, they don't want people like getting a funded account, screwing around, doing nothing with it. Like this isn't necessarily forcing you to trade. I mean, this rule 5 is more like saying like, hey, you can't just sit around and do nothing. We're giving you a funded account for a reason. This one though is saying you got to stay on the positive side of things. I don't see it being an issue because, really just, be a profitable trader is what you need to be. And if you know what the rule is up front, you can actively manage it. So they don't want people digging themselves a huge hole and then just doing nothing about it, leaving their account negative. Like you have to try to stay positive. So I think this is good. And it's good to remember that this is positive net profit and loss. This isn't account balance. And there's a big distinction there. You can't just like say week 1, your first 5 days make like let's just use big round numbers, like $10,000, and then think, cool, like I'm good on this because I'll just never like go below $10,000 and I'll always have a positive. No, it's your actual trading activity every 15 days needs to be positive. So, if you get a $10,000 balance week 1, yeah, you're probably good for the first 15 days, but then say in your next 15 days you were to lose $1,000. Well, that's the P&L. That's you are down $1,000. Your P&L needs to be greater than 1,000. So even though your account balance is still at say 9,000, so definitely something. This is one to be very aware of. You need to be positive every single 15 calendar days. So this will be the one that I'll definitely be watching, and the start of every 15 days, definitely be cautious. You kind of want to like. At least my game plan would be to creep my way into profitability, and then that's kind of my stop loss. Like, so say the 15-day start, like try to make 1,000, 2,000, and then say, okay, like we are, whatever my balance is at that point, we are not falling below that number because, we need to abide by this rule. And last thing, guys, I want to go into is the profit info. They talk about taxes, basically your tax as an independent contractor, 1099 if you're in the U.S., profit split, pretty standard, I'd say. I did the one where you get 80%. OneUp's the only one I've seen where they have an option. Like you can pay a lower monthly evaluation fee, but you get less when you're funded. And to me, that makes no sense. Like you could pay slightly less, but when you get funded, you only get 50%. So you're saving like whatever the difference was, like $50 or $100 to do a cheaper, evaluation. But going forward, you're only getting 50% instead of 80%. Like long term, that just didn't make sense to me, like why anyone would choose this. Like just imagine now you're getting funded and you're only gonna get 50% of your profits. Like even if you made only $1,000, you're making 300 less based on that $1,000. So anyways, I digress. I'll be getting 80%. You keep 100% of the first 8,000, pretty standard. I can't remember what TopStep is. It's either 5,000. I think it's 8,000 too, quite honestly. Actually, I think most of them are 8,000, so this is pretty normal. And then it's an 80-20 split. So one thing, so there's a couple unique things here relative to the other ones. Again, I don't think these are necessarily bad or going to be an issue. Are they a little bit more restrictive? Yes, but let's go through them. They have a withdrawal threshold on kind of two fronts. So I did the 100K account. So you can't withdraw until you have over 3,500 in profit. And they have a little graph here. So at the $3,500 level, all this orange, if your profits are only here, like it shows day 1, day 2, day 3, let's say day 3, I'm up $2,000 in my account. I can't withdraw a dime of that. I have to wait till I'm over 3,500. They basically force you to have a buffer. Now, you could, and it would have actually been interesting if they had shown it this way too. You could fall below this. You're not going to blow your account. Like you blow your account if you fall below your trailing stop loss. you could fall down here. It's just you can't withdraw until you're up and above 3,500. From what I've read, if you ever get to the point where you're closing your account, then you can cash in this 3,500. There's a few quirks with that. I'm not going to go into it. I'm not planning on closing my account anytime soon. But basically, you need to have a 3,500 buffer. Does that kind of suck? Maybe. Honestly, I think it's for the good of the trader. That's really what this rule does. Well, one, it protects, OneUp and MES Capital. Two, it really does help you because, like, I wouldn't want to be below 3,500 because I'm not going to be able to withdraw money. But also, it gives me a nice buffer. Say I just had a bad day. Say I'm right at this point and I fall down. Well, I know that I still have some buffer. I'm still above the actual trailing drawdown, which will max out at 100,000. So that's the one kind of gotcha. Just my plan is to kind of do what this graph shows. Build it up. Step one, get the 3,500 buffer. Step two, start making profit and then do withdrawals, but not withdrawals that would bring me all the way down here. Like maybe once you're up here at $8,000, do a $3,000 withdrawal. So I still have $5,000 in the account. I still have a buffer that I could withdraw if I needed to, but I still am kind of climbing here. I mean, that's the plan. Catch number two. Again, this one doesn't bother me, and let me see if they have it here. I think, okay, it's kind of down here is like a star. Trader share is subject to a minimum transfer of $1,000. Here they're just demonstrating how the 20% fee works, etc. So you can only, your minimum withdrawal is $1,000. Now that's, again, might be an issue for some people. That would be more an issue if you're, especially if you're in a smaller account. Say you're in the 25K account and you're probably not, making as much as someone in the 100K account, potentially. That's a bigger hurdle to, kind of accomplish. You might only be looking to make a few thousand a month. So again, I don't suspect it's a big deal. I don't mind that it's 1,000. If it was 2,000, then I would be a little bit like, wow, that's kind of steep, but 1,000, I don't mind. I would nick it as a negative though, just because I know with other companies like TopStep, you could withdraw like $50 if you wanted to. So OneUp, going to be sticking with 1,000, but I'm just going to build that into this plan. That's part of why I gave that example. Like you get up to 8,000, withdraw 3, I still have 5. That way I still have, 1,500 above their little limit here. So say the next week was just kind of dead and I needed to withdraw money, I could. I've got some money in there that's withdrawable because it's above the 3,500 and it's above the $1,000 threshold. Here they're just showing you the fees and stuff. I mean, basically there's $35 fee in the US, 50 in Canada. It's obviously a Canadian futures trader. Not too worried about this stuff. Again, pretty standard. 80-20 split. I withdraw 4,000. So whatever amount I request, they then take their 20% cut off of that. I would get 3,200 less the bank fees, so less another 50, and they keep 800. So that is it, guys. I just wanted to go over this. So I was glad I did the research into this. There's the few surprises like this I had no idea about, before looking into it a bit more, the $1,000 withdrawal, and then the probationary rules. This one is, if any of this stuff, this is kind of the one that I'm most kind of, I don't want to say concerned about, but slightly, you need to be profitable every 15 days. Like you can't go on a bad run. Now I'm not planning on going on a 15-day bad run, but people do go in slumps. Like what happens if? But I guess looking at the positive side of this, it forces you to be very cautious. You wouldn't just charge in and be like, I'm going to Hail Mary on this trade, and if I lose 3,000, so be it, I'll make it back. I'd think twice about that because I'd be like, no, I don't want to lose 3,000. Now I have to dig myself out of that hole in 15 days or I'm losing my account potentially. So there you go, guys. I'm going to leave it at that. This video ended up being slightly longer, as my videos tend to be, than expected. But all that said, I am excited. Timeline for me is I will be done on Thursday with the 15 days. I suspect then it'll be Friday before I potentially hear from them, just after the dashboard updates. And then, as it says, there's the trader questionnaire, the contract, etc. So I'm really I'm guesstimating the end of the following week. So I'm fingers crossed, hoping, and pretty confident that I will have the funded account by about the 15th of January 2021, and really looking forward to that. So that is it, guys. Thanks for watching, and I'll see you in the next video.